When you see the whole world shaking and you feel your heart is breaking, take my hand, no hesitating. Oh, 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 oh. When you're just so tired of trying, all alone you feel like hiding. Together we'll keep fighting. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Feel this, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Can you see the sun is shining like a new hope? Feel it rising, coming over the horizon. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Feel this, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. There's no stopping.
Okay, I think we're on the air. I just want to do a sound check. I apologize for being about 4 minutes late. I was having some technical difficulties. All right, and I'm hearing myself. Okay, so I think we're good. The software that I use wasn't using or showing my video, and I had to reopen it. So these are the things that happen. Okay. But I just got back from showing homes in Virginia Beach. And what's interesting about this is that this client who actually, it shows you how important it is to, there's a little bit more light on me, how important it is to stay in touch with your clients. And we actually spoke, I will say, about 2 years ago. It might have been longer. And then called him a couple of times and didn't hear from him, but I put him on my emailing list so he would get my weekly newsletter. And a couple of weeks ago, he called me. He was ready to re-enter the market. Now, he wanted to come down 2 weeks ago, and that Friday, he gave me homes to show him on Saturday. And the ones that he sent me, they were already in contract. Either they were in contract or pending, meaning that there were no longer any contingencies on it, and they were heading to closing. All right. Pending, it goes pending when everything is off, any type of contingency. So what could be a contingency? A home inspection. It could be the POA disclosures, the condo disclosures, and so forth. Okay. So that was off, and with the homes that I would want to show him, they both had that. They were waiting the outcome of a home inspection. They were waiting for the outcome of the PO or HO or condo documents, and I think one was a short sale, so they were waiting for approval from the bank. So the point being, and these homes were like from 480,000 to about 540,000. So it's not something that's around 250,000, 150,000. There are people or customers, clients multi bidding on homes, all right, that are in these higher ranges. And the fact today, I spoke to one who was at an open house, and where he is experiencing people purchasing homes, about up to 20,000 more than the appraised value. So meaning prior to the shortage of homes on the market, and so many buyers being out there and who are ready and willing, okay, they're pre-approved and they're wanting to move, and we just have this unbelievable competition right now because of the shortage of homes on the market. Now, one good thing I have to say, and by the way, going back to finishing that thought, they're paying, so the appraised value may be 480, but people bid over that, and it's at 5,000. Prior to this situation, usually, we meet at the appraised value, or even if it's less, the buyer drops the price, or the seller drops the price of the home. But that's not happening now. Okay. My only concern, and this is something going off topic that I didn't plan for today, but one of my biggest concerns is these people who are paying, from $10,000 to $20,000 over the appraised value. Once this market calms down, and I think it will, you might see a little reduction in prices. Reports that I've read said that it'll level off, but there might be some areas that might actually fall below. So here, let's say you have to sell your house, and now you paid, let's take a house that was 480, you paid 500, but to sell it from 2 years from now or 3 years from now, you have to go by the 480 price, so you're going to take a beating on that. So we'll see what happens. It all depends on the appraised values, the market prices of the homes. If they begin to, when I say level up, they reach this point now, and they'll just stay there. It doesn't go up any higher. And for the people who have made the purchases, it doesn't go lower. So they have like a negative equity in the house. So hopefully that doesn't happen. All right. But the point is that we need listings, and we all need listings. Of course, I would love to get all the listings, but I'm going to be fair. Work with my other realtors out there. We'll all get our fair share. But we're getting 3 within the next month, and keeping my fingers crossed on that. They're thinking about putting it back on the market. They're feeling a little bit more confident. And these are people that I've been in touch with for months and months. Okay, so hopefully that will happen, and hopefully more houses go on the market, so we don't have to have these crazy bidding wars on it right now. I'm sorry, I was out the whole day. I didn't have dinner. Okay, I forego going dinner to keep on time to have my broadcast here. So I'm hungry. I'm telling you that right now. I'm hungry, but I want to be here for you. Okay, so let's hope my little introduction will work with what I'm going to discuss today. Hopefully it's going to click in now. Okay, I'm back. What happened to my graphic? Oh, hold on for a second. Hang in there. Okay, hold on. I just got to do a couple of clicks here and go back down to here and then click this. And okay. All right. And actually, I'm going to come back to that. But you see over here, today's topic is tax refund plus stimulus check equals home ownership. And will affect the majority of population, unless you made a heck of a lot of money. And if you made a heck of a lot of money, you already have your down payment, okay? But if we still have a middle income class, for the majority of people, you are expecting a stimulus check of $1,400 if you're single and made under $75,000. If you filed jointly and you made less than $150,000 together, you'll be actually getting $1,400 each. All right. If you made over $80,000 per person, then you're not expected to get a stimulus check. So that's how they actually, which was actually a smart idea when we had no limits for the first one. It went to everybody, and people who really, the first one was 1,200, and that was what the 1,200. But I need that, So it went to people who really didn't need it, but this was more focused on the people who could really use it and would be very helpful for them. And most of these people who are in that grouping of getting a stimulus check, most likely they're going to get a tax refund. And if you're doing it electronically, which you should do, it's a lot faster and it's more correct. So, like, say if you a lot of times when it's kicked out from, if you filing electronically, it's kicked out because something didn't add up correctly. This is a piece of information that's missing. It doesn't mean it's being kicked out because you try to finagle your taxes there. It gets kicked out for certain reasons. A lot of times when people we hear the word audit, and an audit could be a simple thing where you forgot to sign your paperwork, okay, or one of the columns that you added was incorrect. So that's an audit, even though it's not like sitting down with a tax auditor and going through all your receipts. And something like that is considered an audit because they look there was something missing on your taxes. But if it's something where it is like a mathematical thing, or you missed the space, the e-file will kick it back right away, and it probably will tell you. Most times it will tell you what's missing, what's wrong, and you could fix it correctly. And once it goes through there, you're in good shape. Okay, most of the time you're in good shape. There could be something still where they want to look into. Okay, but the majority of times you're in good shape once it's been accepted, and they say your payment will go out in about 2 weeks or whatever. And with that, or going back to especially new buyers who might be at the beginning of their careers, the hardest thing they have to do is to build up that down payment. And doing some research on this today, there was a time where you had to put like $50,000. I mean, 50% down. But then again, homes were, you could buy a house for $5,000. I mean, times are different. If you are not going with a government-backed loan, which we'll talk about, you usually are doing about 20%. There might be some programs you could put down 10, but it's usually 10 to 20%. And 20%, like if you're even looking at a house that's, $100,000, 20% 10% would be $10,000, and 20% would be 20,000, and still at that amount, 20,000 is a little difficult for people to save up. So what the government did years ago is they started government-backed securities, which one example is FHA, which we do a lot here. And I'll probably just go to my graphic. Let me just click on that, go to here. Your tax refund and stimulus check may help you achieve home ownership this year. So this year, not only do we have a tax refund, which a lot of people wait for to help them with their down payment, you have a stimulus check, all right? So that's a little extra gravy there, okay? And the Internal Revenue Service says it's estimated that Americans can expect an average refund of 2009-25, just a little under 3,000. So let's say it is 3,000, and you get $1,400 from the government. You have a $3,400 down payment right there. And actually, okay, what we're going to, and I'm jumping the gun a little bit, if we would go with an FHA program, and you're buying a house for $100,000, okay, so you have to put down 3.5%, and 3.5% of that would be $3,500. So you're just $100 short of your down payment, okay? So it's really a bigger shot in the arm when it comes to putting down your down payment. Now, of course, a lot of houses are not 100,000. If it's 200,000, so it's double that amount, we're looking at $7,000 of down payment. But with these programs, okay, and actually, this map here is showing you the average amount of the tax refund in different states. So in PA is 2742. New York should be higher. So New York is where they put it up here. It's a little bit higher, almost 3,000 there. Here in Virginia, we're actually higher than PA. It could be too because we have a lot of high-paying jobs in the northern part of Virginia, and if they have enough deductions, they'll get a nice refund. Okay, so this is a little bit the whole map of the United States. Don't ask me why, these areas where you have less population and more land and cattle, they actually have a higher refund. That's a whole other question. I don't want to go into that right now, but I just find that interesting. Sometimes you find things interesting. Okay. All right. So with the Federal Housing Authority, or FHA, and then they bring in Freddie Mac and Fannie Mae. The two big ones here. Well, I should say three, because we are surrounded by military bases, is the Veterans Affairs loan as well. So we have the FHA, the Federal Housing Authority, we have Fannie Mae, and we have the Veterans loan, okay? Fannie Mae, you have to put down 3%, and with FHA, you have to put down 3.5%. If you are a veteran, or if you are a current active military member, you still are eligible for the VA loan, okay, with 0% down. And the beauty of the VA loan, okay, is that, number one, you get 100% financing, and number two, you don't have to pay a private mortgage insurance. And what that is, and sometimes it's called private mortgage insurance. I think that's with Fannie Mae. Don't quote me on this. It differs with the two authorities. But basically, since you are putting down less than 20%, the banks find that a little bit more nerve-wracking, all right? All right. The more money you put down on the house, whoever's lending you that money, they feel more confident. So if you're putting down 3.5%, they're saying, well, they're not putting down that much. They may default on the loan. So they ask for that you get private mortgage insurance on that 20% down. Okay. But the thing is, years ago, once you got 20% equity in the house, that dropped off. But now it doesn't drop off anymore. So this extra amount that you have to pay above your mortgage and interest and your real estate tax and your house insurance, you have this thing called private mortgage insurance. But once you reach that 20% equity in your house, you could refinance, okay, with a conventional loan. All right. Or that would be, in other words, you could refinance with it would be a conventional loan then, and you would lose your private mortgage insurance. All right. See what that in this article that's actually on my blog as well. So if you didn't have enough money from your tax return, then you have your stimulus check, and like in the example I gave you for a house that's $100,000, you're pretty much covered for your down payment. All right. And again, I went over here. I'm not going to go that long into the definitions of both. Okay. But basically, the FHA loan is government backed. Okay. If lenders have to meet certain criteria for their loans to be termed FHA approved, after which FHA backs the loans the lender issues in case a borrower defaults on the mortgage. Okay. Borrowers must also meet requirements to qualify for one of these loans. So being that the government is going to say, hey, if they default, meaning the home buyer, I'm going to pay off the mortgage. Okay. So you could give them, a lower down payment. And even if their credit is not that great, if it's 580 or above, you could still give them a decent interest rate because we're going to back the loan. Now, don't think that, if you get an FHA loan and you can say, well, I won't pay my mortgage because then, the government will pay it off for me. No, then they'll bill you for it. So it's not like you're scot-free. It just gives more confidence to the banks to give you that loan, and so that you don't have to save up 20%, okay, on the house, right? Because like you go for a $200,000 house, 10% is $20,000, 20% is $40,000. Now that takes a bit to save up for. So they show here the pros of the FHA. Unlike most conventional loans, FHA does not require a large down payment. You can put down as little as 3.5% of the purchase price of the property. Now, you could actually put down more if you want to lower your monthly payment. You could do that as well, but the minimum has to be 3.5. So the FHA loans are a good option for young first-time home buyers who have not had as much time to save for a large down payment or establish a high credit score. And then even if you suffer from bankruptcy or foreclosures that have hindered your ability to qualify for traditional loans, you may still qualify for a mortgage through the FHA. So what's the bad side, right? Is everything so good? Could there be a bad side to this? So the cons: you pay an FHA funding fee, which includes a monthly insurance premium, as well as an upfront premium, adds on the cost of the mortgage, all right? So this insurance premium is what we talked about because you are putting down less than 20%. And about 7 years ago, up to about 7 years ago, that would disappear once you had 20% equity in a house. It does not disappear anymore. Ever since the real estate bubble burst, they took that off. You may end up with high interest rates to compensate for the small down payment than you would with a conventional loan. All right. But if you don't have the money to put down 10% to 20%, you'll need to. But the rates are so low now anyway, it really won't matter. Whereas conventional loans allow you to cancel your insurance policy once you accrued enough equity in the home, FHA loans require that you continue paying monthly mortgage insurance premiums. All right. So that's the FHA. And I'm not going to go big into Fannie Mae. That's another option down here. To tell you the truth, most of my clients either used FHA, or if they used military, they used their VA loans. There is Fannie Mae down here. That's a little bit less. But I'm going to tell you, I'm not going to go deep into how it is different and what's the benefits of each, because I'm going to leave that to my very qualified and professional loan officers, because it gets very intricate, and they change. They all have different programs. So I only want to make sure that you know of these programs, but I'm not sitting down with you and looking at numbers, because that's not my job. My job is to find you a nice home, or if you're selling a home, and finding a nice buyer. But when it gets to the intricacies of these different programs, I just say speak to your loan officer. And most of the times I will make that recommendation to whom you will speak to and use as your mortgage loan officer. Now, you don't have to use mine. Don't think you have to. I give you one, you got to use Chris. No. If you don't have one, I'll give you some recommendations. But when it gets into these very intricate programs, like a lot of times a loan officer would stop by and go over their programs and just to give us an idea what's out there. Because you have the different categories, right? You have FHA, you have Fannie Mae, you have VA. There's something else that's called USDA. But each one is again very intricate, and some will save you some money, some won't. Some you will be eligible for, and some you won't. All right. So I leave that for my loan officers to discuss with you. Well, I could tell you, you could very possible go with only 3% down. It's very possible you only have to go down 3.5% down. If you are an officer, or well, you don't have to be an officer, but if you're a military, you don't have to put anything down. And if you're a first-time home buyer in Virginia, we have a program where there's 100% financing. Okay? If you're a first-time home buyer. Now, there are income limits to that too. Like if you're making loads of money, okay, you may not qualify for that first-time home buyer. It's to help people who are just about making the down payment, or they'll need closing costs paid for. And that's another thing I want to talk about. All right. This is always like every time I do these podcasts, there's always like something new. I'm going to shut this down now and come out of here. And there's always something new, because with this type of market, most likely the seller won't pay for your closing cost, the buyer's closing cost. And typically on a medium size to a larger loan, let's start off with $200,000, those costs are usually about 3%. All right. So besides your down payment, your closing cost to secure your home might be on a $200,000 home, $6,000. In the past, I would get, and most of the time, like 95% of the time, get the seller to pay for it. Okay. But now with people overbidding on homes, it might not be easy for me to get that closing cost for you. All right. Because Sellers are saying, "Hey, the ball is in my court. I got it. I got the monopoly board. If I'm not happy, I close up the monopoly board and go home." So very possible, and it doesn't mean I can't get a few. All right, but I mean I'm telling you, it's getting more difficult. I may not be able to get you all the time the seller to pay for your closing costs, and that's including bank fees and origination points and discount points, all right, and prepaids. So may not be able to get it for you all the time now with this type of market. Once it settles, yes, but right now it's a tough market out there. So just to summarize, we're going now into a half hour. I really don't want to keep it more than a half hour. The good thing is that if you were looking for ways of saving money or having that down payment for your new home, you have double the help now. Not only do you have your tax refund, you have your stimulus check. And there are programs out there where you could put down from 3% down to 3.5% down. You may be eligible for first-time home buyers, okay? And of course, if you're military, you get 100% financing, okay? So if you're looking, call me. If you're selling, like I said, we need listings. And most likely, when I list your house, it would just be there 2-3 days at the top before it goes into contract, okay? All right, so now I hope this is going to work, but I heard Leonard, our producer, tell me we have a very special person in the audience.
Chris. Great news. We have a famous international celebrity in the audience. He is a comical acrobat who has appeared numerous times on The Ed Sullivan Show in the 1960s and 1970s along with Leslie Uggams, Lou Rawls, Topo Gigio, Richard Pryor, and the Muppets. Ladies and gentlemen, Mr. Brian Androv.
It was nice seeing him. I used to remember seeing him on the Ed Sullivan Show. It was great seeing him again. Again, have a wonderful, safe week. Wear your mask, wash your hands, keep about 6 feet apart from each other. We're almost there. We're almost to the end of this horrific time, but we have to make sure it ends by keep on doing the right things. All right, and I really believe, and with help from the Lord up there, that we'll get out of this like really soon. Well, soon now. I mean, we did a year, but I really believe that we're getting towards the end. So wear those masks, be social distance, wash your hands, and most of all, please be kind to each other, okay? And I'll see you next week. And I hope I hit the right one here for my ending. Okay, see you next week.